Welcome to Sales Tax and More, your go-to resource for all things state tax related. Now, here is your host, Michael Fleming.
Hi, I'm Mike Fleming, founder of Sales Tax and More, and today's co-host of the Sales Tax and More podcast, where we talk about everyone's favorite topic, which is, of course, sales tax. Today, my co-host, Ellie, and I are going to be going over some frequently asked questions. This is the second of a two-part series on frequently asked questions. In our last episode, we went over 6 frequently asked questions. Today, we're going to cover 8 more. But before we do, I want to introduce you to my co-host, Ellie Moffett.
Hey everyone, great to hear you. Great to have you here. We can't hear you. My favorite topic is sales tax, Mike, and hopefully you did listen to our last episode of frequently asked questions. We have 8 more great questions for you today. And before we get started here, I'm going to do a quick introduction for sales tax and More. So Sales Tax and More is a full service consulting and solutions firm. We have a really great team here of experienced tax professionals who are very dedicated to fulfilling any of your state tax or related needs. So we do a lot of sales tax returns, sales tax registration, sales tax audits, consulting, research, and like our name states, more. So if you have questions about our services, please reach out and ask. We will give you plenty of ways to do so. And I'm going to jump right in here. So, okay, Mike, first question we have here. Are there states with no sales tax? Chances are, if you're listening, you know of at least a couple states that do not have sales tax. There are 5 of them that do not have a state level sales tax. They are New Hampshire, Oregon, Montana, Alaska, and Delaware. The acronym used to remember these states is NOMAD. However, you may have seen some of our material out there, NOMAD No More. That is because earlier this year, Alaska did make some changes to their tax laws. They implemented an economic threshold, and once you pass it, you do have to collect local level taxes. So we've addressed these changes with the head of the municipal league, head of the Alaska Municipal League. We've had him on a couple times to talk about those changes. We also have a blog post out there that really details and lays this out, but NOMAD No More is a thing. Alaska's made it really easy to register and collect. There's one entity to file with. So I'll leave it there. Hopefully you can understand and we can keep going.
Yeah, the without that A in there, NOMAD doesn't work anymore. So we'll have to come up with a new acronym that denotes those states. While we're on that, though, I do want to point out that each one of those states, the 4 states that are left, New Hampshire, Oregon, Montana, and Delaware, they all have some sort of tax that resembles a sales tax. For an example, in New Hampshire, they do tax car rentals, restaurant meals, hotel lodgings. Montana, in some of the resort areas, they actually do charge a sales tax. So when we say that there's no sales tax, it's no state level general sales tax. So, for example, in Delaware, there's a use tax on leased property. So if you're leasing into the state of Delaware, you own property in that state, so you do have nexus, and you are responsible. The lessor is responsible for collecting this tax from the lessee. So there is a use tax. Most people don't understand this. They think that Delaware, no sales or use taxes. That's not true. There is a use tax, but it's limited to the rental property, whether it be equipment or whatever. And it is responsible to be, the lessor is responsible for the collection of that tax. So there are taxes in all of these states. There's just no general level sales tax. All right. So very good, Ellie. Thank you for sharing that information with us. And let's go on to the next question. Do I need to register with the Secretary of State when registering for sales tax? Yeah. Ellie, how about it depends answer?
I mean, it's our first one for this episode, so.
We joke about it. Depends is one of the most common answers in sales tax. And in this instance, it's going to depend on the state, and it's going to depend on what your activities are in this state. Right now, we see a lot of people registering for sales tax because of this economic nexus, this linker connection with states that is caused just by having sales into the state or just by having a number of transactions in the state and no other connections. So if you just have an economic nexus with a state, no, there's absolutely no reason to register with the Secretary of State. Now, a lot of states will make it look like it. If you're out there trying to do a registration on your own, don't be fooled, because the states sometimes, make it a little bit tricky to figure out how to register without getting registered with the Secretary of State. But if you're only registering for an economic nexus, there is not a state out there that is going to require registration with the Secretary of State. If you're doing this, you've made a mistake. So now, that's for if you have this economic nexus, this, and not a physical connection. On some physical nexus connections, depending on what your activity is, there may be a requirement to get registered with the Secretary of State. Not all activities require that. Maybe you've got, a sales rep working from their in-home office. In general, that is not going to require a registration with the Secretary of State. If you got a brick and mortar location, then that's generally going to require a registration with the Secretary of State. And some types of employees working remotely will also require registration with the Secretary of State. So it really depends on what your activity is and what state we're talking about. But in general, if you're just getting registered, and these are the most common types of registrations now, if you're just getting registered because of an economic nexus, no need to get registered with the Secretary of State. And if you are, and by the way, there's a lot of software companies who tell you it doesn't make a difference if you're registering for a sales or use tax, but there is, because on a remote use tax or seller's use tax, you generally don't have to get registered with the Secretary of State, whereas on a true sales tax, then you are. And I think that's one of our upcoming questions, so I'm not going to get too deep into it now. But don't make the mistake of getting registered with the Secretary of State if you don't have to. It's just a whole extra set of costs and responsibilities that you don't want to take on.
All right. Yeah, Mike, we are going to address that question, that question a little bit. So hopefully we can give you guys a little bit more information. So the next question we have here is, do I need a registered agent when registering for sales tax? The answer is not generally. We're not going to say it depends. We'll say not generally. It's a little more descriptive here, but registered agents are generally associated with registering with the Secretary of State. And if you are not registering with the Secretary of State, there's no need for a registered agent. So that's my quick, short answer to this one, Mike.
That's great. And I do want to say one thing. Not all states have a Secretary of State. New Jersey is one of those states. So we should say the Secretary of State or its equivalent. So same concept. All right. So now here's the question that I started answering before. Why would I be registered for retailer's use tax or a seller's use tax or a vendor's use tax rather than a sales tax? Well, let's give you the historical answer first. Back in the 1930s, 40s, 50s, states truly believed that you could not tax interstate commerce directly. And therefore, in order to prevent companies from coming in and setting up right on the border, maybe they were like, 100 yards away from this other store, one was collecting tax and one was not. So they came up with this idea that, since they couldn't tax the transaction, they could tax their people in the state if they were buying something for the storage, use, or consumption in the state. So we're not taxing the transaction anymore. We're taxing storage, use, or consumption. And that protected in-state businesses because the out-of-state business, if they had this link or connection we call nexus, they were still responsible for collecting this compensating use tax. So if you're totally within, the boundaries of a state, in other words, intrastate, if it never crosses a state line, even today, that's technically a sales tax. If it ever crosses a state line, technically it's a use tax. Now, 1977, we had complete auto transit, and the U.S. Supreme Court said that, yes, that you can actually tax interstate commerce directly so long as it meets a four-pronged test. And in 1977, we started having a blurring of the lines. So some states, don't talk about a seller's use tax or a vendor's use tax anymore. A state like Pennsylvania, they just, when you register, you're going to sell for a sales use or hotel occupancy tax. In states like that, they talk about a consumer use tax as if it's a separate tax. It's not. It's just, if the seller doesn't have nexus, then the purchaser is supposed to self-assess and remit it directly to the state. But there are still some states out there. Oklahoma is a big one. They make a distinction between a vendor's use tax and a sales tax. Now, when you're registering for the sales tax, they assume that's intrastate. So you have some sort of connection with the state. That's a physical presence that requires you to register with the Secretary of State, which is a $350 fee. And the Department of Revenue charges you $25. And you need to get a registered agent. And then every year you have to file an annual report. Lots and lots of extra fees. Whereas if you sign up for the vendor's use tax, which is a remote seller, that's who's going to sign up for that. You don't have any other connection. You're just signing up as, someone outside the state who's going to collect and remit the use tax. You don't have to worry. And by the way, the sales tax usually makes you subject to the income tax. So now here you are. You don't have to worry about the income tax. You don't have to worry about the $25 that gets paid to the Department of Revenue. You don't have to worry about the $350 that get paid to the Secretary of State. You don't have to renew this every year. Life's a whole lot simpler. Now, what I started to say before, for some reason, some companies out there, companies like TaxJar, they may have fixed this, but for years, they could not, for whatever reason, file a use tax return. And, most of the people they're doing business with are remote sellers. And they were just telling people to go out and, go get registered for sales tax. There's no big difference here. Are you kidding me? There's a huge difference here. The type of tax that you're registering for is very, very important. On one hand, it's going to be a lot cheaper, very easy process for you, no strings attached. On the other hand, there's a lot of things that you just don't want to do. So wherever you can register as a remote seller or for the vendor's use tax or for the seller's use tax, that's usually a lot easier route to take. Don't get talked into registering for the wrong type of tax.
All right, Mike, I'm going to jump right into the next question here. So does registration for sales tax create income tax nexus? No, registering for sales tax does not create nexus for income tax. You either have or do not have income tax nexus based on your activities. However, it can put you on the state's radar. So my answer is no, but quick little warning in here. It can, like I just said, put you on the state's radar.
I thought for sure you were going to tell me it depends, but you're avoiding the depends answer.
I am. Yep. I'm just going to give everyone a solid no on this one.
All right. Next question is freight taxable? And, this one here, it depends on who you ask. I mean, there's some software companies out there, there's two tiers of software companies. There's, an Avalara or Vertex, which are the top tier. And then there's the second tier and companies like a TaxJar. And for years, TaxJar said freight was either taxable or it's not. Whereas, Companies like Avalara or Vertex, they had 28 different, codes that you could use, 30 different codes you can use, something in those numbers. So you can tell how granular this can get. Let's use California. And, for years, TaxStar was telling, California sellers that freight was not taxable. Well, in California, freight is not taxable if it's separately stated, number one. And number two, there are some other things, but these are the two big ones. Number two, it's a direct pass-through of costs. Now, Amazon bundles shipping and handling with, bundles handling with shipping. Handling is always taxable in California. So shipping is not separately stated. Now, you can back some things out if you can do a percentage, but you don't know what that percentage is. And Amazon never lets you do that. And you certainly didn't know that not that you know that there was some sort of markup in there for Amazon. So it was not a direct pass through of costs. So the answer for all of these Amazon sellers is that that shipping should have been taxable. No, it's not taxable. So there's a lot that goes into this. This is not as easy as people believe it to be. When in doubt, tax if you're, the typical business out there. But you got to read the fine print. If you read the top level there, yes, California says shipping is not taxable unless, and then it gives you all the criteria. So in some states, it's always going to be taxable. In others, it's always going to be taxable if the item being sold is taxable. That's going to play a big factor in this. If what you're selling is taxable, then the shipping is going to be taxable in a lot of states. If what you're selling is not taxable, shipping is not going to be taxable. One's not going to be taxable and the other's not. So that's important to remember. In some states, you got to look at whether the shipping is mandatory or not. So, in a state like Illinois, if you give someone the option, of coming by and picking it up at your location, then that is not taxable. However, if you don't give them that option, then it's mandatory, and mandatory shipping charges generally become a part of the sales price, and therefore it's taxable. So that's the reason why shipping is often taxable, is because in many instances it becomes a part of the sales price. And if what you're selling is taxable, then the shipping is generally going to be taxable. There are a handful of states out there, like in Arizona, where shipping is not going to be taxable under most circumstances, but those are the exception rather than the rule. Again, this is going to be very state specific, and you can't just read the top line answer. You got to dig down and see if it actually fits your scenario. Handling is almost universally going to be taxable in the vast majority of states out there.
Yeah, Mike, I'm gonna go to this next question, and I'm gonna avoid another it depends here. So are foreign sellers subject to U.S. sales tax collection? And my answer is yes. Foreign sellers have all of the same requirements as U.S. sellers. So yes, foreign sellers subject to U.S. tax collection.
Yeah, you're so right. When it comes to sales tax, there are no separate rules. If you're selling in the United States, you're subject to the different rules of the different states. Doesn't matter where you are located, your sales are in the United States. Now, income tax, a whole nother question. If there's a tax treaty, then everyone thinks that foreign companies don't have to pay income tax. Well, not all countries have tax treaties, number one. But number two, states are sovereign. and they are not parties to the tax treaties. The tax treaties are between countries. So there are actually 13 states minimum, depending on, how you're looking at this, where you actually could be required to file an income tax return. So not as cut and dry as many people out there will tell you. So sales tax, yes, same exact requirements as U.S. sellers. Income tax, different story altogether. However, in some states, you still have to fill out forms and or pay state income taxes.
Yeah, and Mike, we get questions about this all the time. There's always people emailing in, and there's a lot of confusion. And luckily, the answer is relatively straightforward. So
yeah, this is one where it doesn't depend. I mean, yes, foreign sellers, responsible. There's nothing special. It's the same exact rules for a foreign seller as for a U.S. seller. All right, and that leads sort of into this next question. It's, do I need a U.S. entity or a U.S. bank account or an ITN number to do business or pay sales tax in the United States? And there's so much confusion here because so many companies out there, by the way, nowadays, everybody's a sales tax expert. All you need to prove you're a sales tax expert is to say you are a sales tax expert. So a lot of very unqualified people out there saying that they're sales tax experts. Be careful of who you're going to for your sales tax advice. But when it comes to entities, the people who are telling you, oh, no, you need a U.S. entity, their business is usually forming U.S. entities. Now, we can form a U.S. entity for you or your clients also, but you don't need one. Sometimes it keeps it a lot more simple if you're doing business with your foreign entity. And we have lots of foreign clients who decide not to use a U.S. entity. So there could be other reasons besides sales tax why you may want to open up a U.S. entity, but you're not required to use a U.S. entity. Now, these same people who are telling you to open up a U.S. entity tell you they can get you a U.S. bank account. And you may want a U.S. bank account, but you definitely don't need a U.S. bank account. Now, you may not be able to pay a state directly when you collect the tax, but there are companies out there like us who, when we're filing your sales tax returns, you send us the money and we pay the state on your behalf. So we have a lot of foreign clients who, just don't want to go through the hassles of opening up a U.S. entity or opening up a U.S. bank account. It's not that easy. They're paying sales tax, doing business, very successful here in the United States. So if you do want to open up a U.S. entity, then that is something we can help with. But by no means is it necessary to collect or pay taxes. You may want it open for another reason, but you don't need it for sales tax.
all right. Well, thank you so much, everyone, for joining us. If you know someone that these questions could benefit, please share it around. We get these questions really all of the time. And if you need other sales tax services, we offer a lot of solutions and services. You can just reach out to me directly, eMoffat, EMOFFAT at salestaxandmore.com, or visit our website, salestaxandmore.com. And in addition to our services, we offer a series of free webinars. We have paid resources, we have free resources. We have a lot of information out there for you. So Mike, thank you so much.
All right. So before I wrap up here, I do want to talk about ITIN numbers because that's something I forgot to answer. I asked myself in the question, but didn't answer. And no, you do not need an individual tax identification number. That's what ITIN stands for. As an entity, you're generally going to need an FEIN number, even if you're a foreign entity. That's also the EIN number. Some people call it the FEIN, Federal Employer Identification Number, or Employer Identification Number. But you do not need the individual tax identification number. We do registrations all the time for foreign entities without that. This has been a new format for us, the previous episode and this episode, where we, answer frequently asked questions. Please give us your feedback. Did you find this helpful? Do you want us to sprinkle these in from time to time? And also let us know what other types of interviews you want to hear. Who should we be interviewing? What topics, what subjects do you want to know more about? And as always, we thank you for joining us on this episode of the Sales Tax and More podcast, and hope to see you on the next one. Thank you, and have a great day.
Thanks for listening. Be sure to click subscribe and check out all of the resources we have out on the web.